The COVID-19 outbreak has had wide-ranging and serious impact on the global financial markets, including stock, bonds, and commodities. In view of the unparalleled geo-economic challenges presented by the crisis, it has rendered Europe and US in a virtual lockdown. Market experts, risk analysts, and debt level systemic observers have struggled to readjust their evaluations. In this view, we have market analyst and expert to answer your questions. Hello everyone, this evening we have Mr. Abhinav Sharma, who is a market analyst at Exila Advisory Services in Mumbai. Welcome Mr. Sharma.
Thanks a lot.
Thank you for giving us time from your busy schedule.
Not a problem.
So let me first start off by asking that how profound was COVID-19's effect on the global finance market in general?
Okay, so when you're talking about the global financial markets, I assume that you're talking about the capital markets,
Yes.
which include the shares, capitals, futures and all. So as we are talking about the COVID-19's effect, you should understand that markets in themselves are very impulsive in nature. They do not care that much about fundamentals as they care about the recent news, the recent tweets, and the recent Donald Trump tweets for that matter. So as soon as COVID-19 started spreading out of China, mainly into countries of Spain, Italy, and the world realized that it has a big problem at hand. They did not know how big, but there was a big problem at hand. As soon as the world realized this, the markets took an impulsive crash all of a sudden. Maybe it should not have crashed that much, but that is how markets are. They react impulsively.
You can say that there was a ripple effect that started from the Asian countries and spread to US economy, and then from then to other countries.
See, the epicenter might have been in China for the COVID-19, but the ripple effect in financial markets occurs from the US markets. The US market being the largest player in the whole of the financial market play game. Whenever US market takes the hit first, then the ripple effect goes on to the other markets, the other continents. So even though the epicenter was in China, the ripple effect, keep in mind, does originate from USA.
Okay, and what countries or economies does it hit first?
See, whenever US market takes a hit, the first market to always take the following hit is the European market, followed by the Japanese and the Australian markets, which are the other advanced markets. Then it is followed by the South Asian markets of India and China. India more in particular, because in recent years, India has increased its dependence and correlation on the US market.
And how do we perceive the next years to shape up?
See, when we are talking about the next years, first we should talk about what we have just witnessed in the previous months. So in the previous months, the outlook has been pretty much positive. The active case load is going down in many countries, including India. Then we are very positive about getting a vaccine for COVID-19 in the first quarter of the next month. So markets, whenever they see something positive that is to happen in the future, they react to it prematurely. So that is why you can see right now that markets right now are actually jumping up. And in the coming years, I believe that since it is going to rebound, it is going to be like a rise of phoenix from its own ashes. Market is going to rebound on the account of this positive news, the positivity that is in the air now.
How likely is it for India to be seen as an equity market?
So see, when you are referring to India's equity markets, you are actually referring to the India's corporates.
Yes, exactly.
So as of now in the lockdown, as we could see that the market took a huge drop initially, but then it was majorly pulled out of the drop majorly on the account of the increasing share price of Reliance, TCS and other blue chip companies. In general, if you talk about the Indian corporate sector, it is pretty much in bad shape as of now because the business is disrupted. Although the numbers seem to be very high, mainly on the account of Reliance growing so fast, but this is what actually something a market crash does. It consolidates the profits. The profits go into the hands of the businesses that are able to absorb that crash better. For example, Reliance, HDFC, Tata. These companies got even stronger. Now it is up to the policy making in India that how do they ensure that the medium and the small size businesses are able to come up. See, even though the bigger chunk of the Indian market is denoted by the bigger companies, but the overall welfare of an economy is decided by the welfare of the small and the medium sized companies. So it really depends on the policymakers that are they really able to redistribute the wealth well, and it also depends on the mindset of the big companies, because ultimately we are at the hands of a few big companies in India. So if they want to play by the fair rules, and if they want to play by some ethical rules, then we can see that Indian market is gonna go in a positive direction from here.
So you mean to say the government also has to come forward to help these small companies?
Exactly. At any point of time in a crash, in any market recession or something, government is the last savior.
Okay.
So government is the dark knight here, and it has to step up its role. And it is actually doing a lot of things with coming up with the new stimulus plans. So I believe that yes, Indian corporates, because there is a new wave of startups that are doing really well in India. So I really do believe that these startups are going to take the Indian market forward, and as they get listed in the public market, they are going to even uplift the Indian markets on a global scale.
How do you think that the Indian banking sector will pan out from here, especially after the news of recent debacles of likes like IDBI Bank, Yes Bank, etc.?
So when I'm actually talking about the Indian banking sector, I'm very pessimistic about it. A reason being that the past decade has showed that the Indian banks are not putting that much thought into their decision making. See, especially Yes Bank looked like a fraudulent case, but especially the other banks like the IDBI banks, whenever they are handing out loans to companies like Kingfisher or Reliance Capital, the Anil Ambani part of Reliance and all, and other houses, they are giving housing loans that are not really good in nature. So it is very evident that their loan book is getting filled up with bad loans, and whenever the percentage of bad loans goes beyond 20% in any loan book, that bank is gonna fail. That has been shown in the past decade. Take the case of Lakshmi Vilas Bank. If you don't know,
Yes.
it has occurred in a very bad shambles.
Yes,
if
exactly.
you say that. So until unless the banking in itself changes its whole structure, its whole way of operation, and until unless RBI becomes more strict with these banks, I don't think banking sector has a positive outlook here. And especially in this times of a crash, where banks should have been the savior, they are themselves running for cover.
Yes, exactly.
They are themselves running for protection from RBI, from government, which should not have been the case. Banks should have been the one which were the first to dole out loans to the needy ones. But because their record at giving loans to anyone has been so bad, you cannot trust these banks anymore. So until unless there is a major reform in the banking sector, I don't have a positive outlook. Other than a few good banks like HDFC and ICICI, other banks don't have that good ethics, I believe.
What are your thoughts on capital markets, which seem to be rebounding and optimistic, even though the fundamental of the economics are not very bright?
See, as I just said in a previous question as well, that the markets are actually forward looking and they are very impulsive as well. So markets do not actually look at the fundamentals of the economics that are in the present state. They actually try to predict what is going to happen in future. And just as I said, that the future looks bright, that the vaccine is going to come, and also that the activities are going to be are going to reach pre-COVID levels and even might breach them. So the market is actually focusing on that. The market is very optimistic, and I do believe it has the right reasons to be optimistic about it. So yes, as of now, the unemployment is high and the economic fundamentals are very bad. The GDP is going to contract, but the markets, as I said, actually look forward into the future. And the markets already incorporate that optimism into their current prices, into their current positions. So that is why at this point of time, you can see the markets have rebounded. They are almost to the pre-COVID levels, and they are really very much looking to a future which is even more active and more vibrant than it was before COVID. So I can again sum it up as that markets are very impulsive, and you can add to it that markets are forward looking.
Okay, thank you so much, Mr. Sharma, for taking out time again.
Oh, it's been a pleasure here.
I hope all the questions of the viewers have been answered. Thank you very much.